Morning, guys. It's Wednesday, July 16th, 5:25 a.m. Central Time. Grain markets are mostly higher this morning. December corn futures up 6 at 425 and 3/4. November soybeans up 9 cents at 1010 and 3/4. December Chicago wheat up 3/4 of a cent at 559 and a half. December Kansas City wheat up a half cent at 546 and a half. We're going to start off with inflation today. I promise I'm going somewhere with this.
So, inflation has climbed to its highest level since February. According to yesterday's CPI report, consumer prices in June increased 0.3% compared to the prior month, up from a 0.1% gain in May. On an annual basis, prices rose 2.7% compared to 2.5% the previous month. Both figures were in line with market expectations. Tariff affected goods such as clothing, appliances, and home furnishings saw particularly sharp price increases, suggesting that tariffs may be starting to drive overall inflation. Despite the uptick in inflation, Trump used the report to renew his calls for the Federal Reserve to cut interest rates.
Mackenzie, there was a period where we discussed inflation a lot, and I don't even think we've covered the CPI report the last few months because it's really kind of just it's died down a little bit. So the US consumer price index percent annualized change. We're down to 2.7%, which is actually an uptick compared to where we've been. But relative to the 9.1% peak that we saw in June of 2022, inflation has declined drastically. So that 2.7%, what that means is that the basket of goods and services purchased by urban consumers tracked by the government, that basket has increased 2.7% versus the same period last year. So yeah, we've still got inflation. It just has leveled off slightly. Perhaps a better way to view the consumer price index is through the actual index, which is at a record high. So if you think that the things that you buy, whether it's groceries or gasoline or whatever, if you think that things are as expensive as they've ever been, they are. CPI is a measure of the average change over time in the prices paid by urban consumers for a market basket of consumers' goods and services. It's as expensive as it's ever been. So here's where I wanted to go with this. I was playing with some charts, and it's a slow news day. Here's corn prices and inflation. I don't know that correlation necessarily equals causation here, but there's something here. Part of the price strength that we saw in 2022 in particular can absolutely be attributed to inflation. Now, we had some tight supply and demand scenarios during that time frame. We had some Chinese buying, but I think that there's something here, and I've kind of alluded to this a little bit in the past. Let's look at this chart, and then let's look at this one. So here's U.S. corn ending stocks to use ratio. The way that corn prices are supposed to trade is based off of supply and demand, right? I mean, that's what I've been told for decades now. Okay. Our ending stocks to use ratio for this current marketing year is projected at 8.75%, which is very similar to the 8.3% that we saw following the 2021 marketing year and the 9.24% that we saw following the 21-22 marketing year. During those two marketing years, we saw corn prices like north of $7 on the board. Yet this year we're sitting here closer to $4. So what makes more sense to you? Is it this chart, the supply and demand, which doesn't really line up with what we saw the last few years, or does this chart make more sense? Pete and I have discussed the funds at length and the people with the deep pockets, the large speculators who trade this stuff, and how they're not the same funds that we traded with 10 years ago. The same funds that we traded with 10 years ago were the funds that we traded with 10 years ago would trade the weather and the supply and demand, and you'd see your crop scare events, and then you drop 20 cents when you saw a wet forecast on Sunday night. It's like we're not really seeing that sort of thing. I'm not saying the fund traders are dumber than they used to be. I just think that they've changed. I think they're using algorithms. I think they're younger. I think they're focused. I think they're focused on other things. So I don't know. Maybe the best thing for corn prices or for grain prices right now would be a return to rampant inflation for you. And rampant inflation for most people is very bad. Maybe for the farmer, it would be a good thing. The problem, of course, is that inputs remain inflated. And if you saw another rampant inflation type event, they'd probably become even more inflated, which would present a problem. So why can't corn get off its ass? Maybe it has something to do with this. That's my stupid theory of the day. Let me know what you think, by the way.
Rains are moving across parts of Iowa and Minnesota here this morning. There is an additional system over the western portions of North Dakota and South Dakota. Scattered rains also appear on the radar in the eastern Corn Belt. Accumulation of 1 to 2 inches is likely across a large area of the U.S. Corn Belt during the next 5 days. Accumulation in excess of 3 inches is likely during the 10-day period in many areas. Temperatures are slated to run near normal across the region this week. However, the extended forecast calls for above normal temperatures across most U.S. corn areas.
We've seen a lot of heat in the extended forecasts, but a lot of it has not come to fruition. So we'll see if this one is accurate. And if so, what sort of impact does it have on the corn crop, or maybe more specifically the soybean crop as we get into that key part of the growing season. I'll go back to the rainfall. Is this going to end up being an excessive rainfall situation in parts of Iowa, in parts of Illinois that just caught a ton of rain here over the last couple of weeks? I don't really know. It's up for debate. Different people have different opinions. My thought on the national yield is that, the people with the deep pockets are eyeing something pretty big, something 185 or maybe north of there. Those ideas are fluid, though, and they could probably change if the weather goes in the wrong direction, meaning like maybe too much rain or maybe some of this heat comes in and hurts the crop late. So there's a lot that remains to be seen, but I still think the market is working with an idea of a pretty big national corn yield.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about yesterday's premium video?
Pete was on yesterday. We did biofuels, RVOs, farm economy, 45Z. So when Trump signed the big, beautiful bill, 45Z was extended by a couple of years. And there are some implications for the farmer, but there are some things that maybe you shouldn't do. And Pete answered some questions for us. If you're a farmer, should you be paying for carbon scoring right now? If you're a farmer, what do you need to do? Should you be doing anything because of these newer developments? Is any of this cash? Is any of this tax credit? Is any of it going to come back to you? Is the ethanol plant going to pay you for low carbon corn? We're back to this conversation because 45Z has been extended, but there's a lot of details here that are worth being aware of. And Pete is very good with this stuff. That's what we discussed yesterday. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. This is a $50 per month subscription. You can cancel at any time. There's no other fee, no other obligation. Nobody will try to sell you anything else. Make sure you give that deal a shot, guys. We do a YouTube show here and a podcast show for free, but we'll never make a dime doing this stuff for free. The only way that we are able to do what we do here every morning is through the premium subs. So premium subs, we love you to death. If you are not a premium sub, support independent media and sign up this morning. You guys will love the premium stuff if you haven't seen it. So give that deal a shot.
NOPA released its June crush data yesterday. The U.S. soybean crush declined 3.7% from May, but rose 5.8% year over year, with NOPA members processing 185.7 million bushels in June. The crush was the largest on record for the month and also exceeded the average trade estimate of 185.2 million bushels. End of month soybean oil stocks declined to 1.36 billion pounds, down 0.5% from May and 15.8% from a year ago. Stocks were the lowest for June since 2004 and came in just below the average trade estimate of 1.37 billion pounds.
I had a really good chart of U.S. exports and crush that I neglected to include in our slide deck this morning. It is in the email, so premium subs, you can check that out. So the crush pace is excellent. USDA projects that domestic soybean crush during the current marketing year will increase to a record 2.42 billion bushels. The new crop crush projection was revised higher last week and now sits at 2.54 billion bushels. And if that number's real and all the other demand stuff is real on the USDA new crop balance sheet, and it's not real, it's just a guess, but crushes is likely to represent about 58% of all demand for U.S. soybeans, and it could get better. We're in this RVO comment period. Pete and I talked about a little bit yesterday, and depending on how that goes, the crush could go with it to some degree.
President Trump and Indonesia have finalized a trade agreement. Under the deal, Indonesian imports will be subject to a 19% tariff, while U.S. exports to Indonesia will remain tariff-free. Indonesia has committed to purchasing $4.5 billion worth of U.S. agricultural products, primarily wheat, soybean, soy meal, and dairy products. In recent years, the U.S. has been Indonesia's second largest agricultural trading partner behind Australia. Indonesia is the third country after the UK and Vietnam to reach a trade agreement with the U.S. since Trump began threatening tariffs.
I ran some stats on wheat and meal in particular. Indonesia is the world's second largest wheat importer, but the second largest wheat importer is only 5% of all imports. So, like when it comes to wheat imports, it's really spread out over a ton of different countries. Right now, the way that it works, Indonesia sources the vast majority of its wheat from Australia, Canada, and Russia. There is some US wheat involved there. When it comes to soybean meal, Indonesia is the world's third largest importer, or is projected to be. They source more than 90% of their meal imports from Brazil and Argentina. This could be a big positive for meal. We are going to have a glut of meal in this country if we don't already, because of the expanded crush. We're crushing beans for the oil for biofuel, but the bigger product of soybean crush is meal, of course, and we're going to have more meal than we know what to do with. So some of these trade deals and could be a positive, and it's really great to see purchase agreements. We need a purchase agreement from China is what we really need, but this is a step in the right direction.
President Trump's 50% tariff on Brazilian imports could reduce the flow of Brazilian beef into the U.S. Set to take effect on August 1st, the tariff has already prompted Brazilian meat packers to scale back fat cattle purchases amid uncertainty over future shipments to the U.S. With the U.S. cattle herd at its lowest level in nearly 70 years, U.S. meat packers have increasingly depended on Brazilian beef to meet demand. The U.S. is Brazil's second largest beef export market, trailing only China. In 2024, the U.S. imported approximately $1.4 billion worth of Brazilian beef, roughly 23% of total U.S. beef imports for the year.
So we do import beef from Brazil. How big of a deal is this?
It's a double-edged sword, in my opinion. So, of course, if we would cut off beef imports from Brazil, there's a chance that that could raise prices even higher for U.S. consumers, considering that beef prices are already at record highs, considering our domestic herd is at the lowest in 7 decades.
Mm-hmm.
But then on the other side of the coin, a lot of cattle producers are all about cutting off beef imports because they say that Brazilian beef imports have choked out U.S. cattle producers through the years and actually contributed to the shrinking U.S. cattle industry. So it could be a big deal. It'll be interesting to see if this tariff actually comes into play.
There are some other things that we import from Brazil, ag products. We import 30% of our coffee from Brazil, orange juice, sugar. There's a bunch of stuff that has been impacted by these tariffs on Brazil. What did cattle prices do yesterday?
Cattle futures were higher. Live cattle were $157 to $305 higher. Feeders saw gains ranging from $252 to $302. Box beef prices were mixed. Choice was up 65 cents at $277.72, while Select was down $2 at $362.58.
Outside market's pretty quiet. The Dow's up 20 points. S&P's off 4. Treasuries are mixed. U.S. dollar's off just a little bit. Crude oil is down 16 cents in the August WTI at 66.35. Have a great day, guys. We'll be back on Thursday.